Which brings us on nicely, obviously, to the year that we're in. I actually did some analysis at the beginning of the year on Waltz and assets that are transacted over the course of 2020 and 2019, respectively. And one of the main takeaways that I saw from this data was in 2019, 34% of transactions that occurred had Waltz of under 3 years. Compared to 2020, that was 60%. So all the transactions and evidence we've just presented does point to a year of real value add heightened activity. Do we think this will continue in 2021? We do, yes. I think mainly it will be led by the occupiers looking for best in class office buildings, and that will in turn come down to the fundamental belief that rents will grow in the best locations and transport hubs. It will remain a highly nuanced market specific to these certain target locations. And certainly, as Andy, as you're just saying, that the widening gap between prime and secondary value add opportunities. And whilst there is little stock and so much demand, as I said at the top of this video, with over 40 billion circling central London, we could see prime yields harden, although time will tell as to how 2021 will pan out. I think some of those themes that I've just mentioned there. Andrew, what else would you say that you envisage happening in the central London market at the moment?
I think your analysis that you did at the start of this year on what kind of product came to the market last year was really interesting, wasn't it? Because we kind of knew it and we talked about it, but we hadn't proven it through the data. And I think your data suggested that of all the sales that occurred last year, 80% of them were either opportunities with below 3 years of income currently in place or above 8 years of income currently in place. So there was a real focus on value add sales, value add refurbishments, developments, and core income sales. And that core plus part of the market really wasn't tested. And you compare it like you did to 2019, and it was a real difference. And I think that's going to be a trend that continues. We've complained, haven't we, for weeks now that the market for lockdown 3.0 has been really, really quiet. I took 3 weeks off over Christmas. Thought I was going to come back, super recharged, refreshed, ready to go at it. And we just didn't see the stock, did we? There is, I remember at the time in last week of August, going into September last year, where we saw this bounce in the market, and we were seeing, I would say, probably maybe 4 or 5 deals a week being talked about in the team. And we came back in January, and we were perhaps seeing 1 a week. But I do think that is going to change, and we've been sitting on a number of sales, advising clients on various different projects where we are going to launch those sales at the appropriate time. But actually, the ones I'm working on haven't been driven by lockdown 3 or COVID. It's been project specific things, due diligence that we've been working through. And I do think, hopefully, as the vaccination program starts to work and make a difference in the UK, and the season changes and optimism starts to grow, that you will see more stock coming to the market as the year progresses. I think a really interesting part of the market is going to be that core plus part of the market, and investors that we've both spoke to have had a real concern about immediate letting risk. We've been around a number of assets, both of us, that have come to the market for sale that have got vacancy currently in place, refurbished floors, and trying to price that floor, trying to put a rent on that floor if you want to get rid of that space, let that space in the short term, is difficult at the moment. And I think hopefully as the leasing market and transactions start to increase, that is obviously going to become easier and easier. But I do think that there could be some opportunities out there for investors who are willing to look in the core plus part of the market, potentially assets where you can grab hold of maybe big chunks of the space, but definitely the reception and the back of house amenity, to reposition those assets without having to get hold of the whole building, and therefore compete against what could be 6 to 12 other bidders. So yeah, I think the main takeaway for this year, for 2021, is going to be more of the same, but that flight to quality, isn't it? If you're going to pick out one trend, it's going to be that continued competitiveness in the value add market, and investors wanting to get hold of those projects they can completely reposition.
Fingers crossed we can get ourselves on the end of one or two of them, Andrew.
It'd be nice. Get me out of my slippers.
In conclusion, come and talk to us. As Andrew mentioned in the beginning of this video, we've got an awesome set of data in relation to our pipeline, and which sub-markets to focus on from an existing owner viewpoint, but also from when the construction will begin. And all this information will assist with underwrites and market knowledge. Last year was remarkable. We've mentioned why and what happened. It was, if anything, it showed how resilient the market was. Nearly 5 billion alone actually transacted in Q4 across central London. But as we now know, it accelerated the focus on best-in-class office space and the flight to quality. And as Andrew's just mentioned, this will continue. Looking forward, as we've just explained, there'll be more core plus opportunities that will emerge. I think this is going to be one of the most interesting parts of the market in 2021. Thank you for listening.